Greetings, members one and all of the Salivation Nation. The precious metal markets have been rocked by today's news coming from trade. Boy, I tell you what, it is something to see how psychologically these markets are reacting. Trade optimism, a little bit of hope. Strong U.S. data, gold slides 2%, silver sheds 4%. That's quite a story, a telling story. I think that tells us the nature of what's going on here in the markets. But let's explore. This comes to us from CNBC. And by the way, I do like to pull from different sources from time to time and just kind of get the idea of what the pulse is in some of the mainstream areas, rather than just Kitco and the like. So we kind of pull data in from CNBC, Market Watch, Bloomberg, other sources. I think it's kind of good to get an idea of where this thing is going and analyze and kind of speculate based off of what's going on in the psychological levels that we're seeing here with these markets. So let's explore this and see where things are at and get your views as well in the discussion below. So here we have gold taking quite a hit and silver an even bigger hit. Gold slumped more than 2% and silver shed 4% as stronger than expected U.S. economic data and hopes of a thaw in the U.S.-China trade war boosted Treasury yields and soothed fears of an economic slowdown, driving a shift back into riskier assets. And I think that's just it. A couple of different news bits are encouraging from one area to another, and we're going to see movements like this. But it's quite fascinating. We're going to explore those prices and see exactly what's going on and what and why we should still be encouraged, especially considering where the prices have come in recent weeks. Spot gold fell 2.1% to $1,520.60 per ounce, and silver fell 4% to below $19. But look, it's $18.79, and we'll take a look at the numbers where they're at right now. And the gold futures has also dropped 2%. Both were set for the worst daily percentage decline in more than 2.5 years. And really get a better example of that, especially with returns in terms of gold, this article from mining.com I think is quite telling. It had really plunged a lot earlier. The gold price plunged early morning trade on Friday in one of the worst trading sessions in dollar terms in gold market history. That is telling. The gold price dropped to $1,514.30 an ounce in mid-morning, down 3%, or $46.10 an ounce from Thursday's settlement of $1,560.40. Now, is that gold market history? Maybe for the time period, maybe for that quick of a drop and that quickly, I don't know. But I don't have all that data in front of me to be able to tell. But Thursday's settlement of 1560.40 in the COMEX market in New York. The trades that crushed December delivery gold in the morning trade came in 3 short bursts of 1 million ounce plus sell orders, forcing bulls back on the defensive after a nearly 10% rally since the beginning of August. Gold regained some of its footing by lunchtime Friday, still more than 2% down on the day after 55 million ounces of gold had exchanged hands in total in New York. That's equivalent to half a year's global gold production. That's telling. I think it gives us a little bit more insight on what happened today. The gold futures market has been quiet in recent years, but today's wild swing in dollar terms is the biggest fall in the price since 2013, when gold is trading at almost exactly today's level in the mid-1500s. And by the way, you can take this and multiply it by 2 with regards to silver, probably, although I don't know what silver did earlier in the morning. But these wild swings that that's talking about here, ended the day, gold ended the day on April 15th, 2013, over $87 below the previous closing, and never recovered on its way to $1,050 an ounce 3 years later. On that day, 10 million ounces traded within 30 minutes, described as a shock and awe trading strategy by a short seller. Gold hit a record $1,909 an ounce intraday on 23rd of August 2011, but the next day suffered one of its few triple-digit one-day losses when it plummeted $105, ending the week down more than 10% from the all-time high. Adjusted for inflation, gold's highest price point ever was on January 21st, 1980, when the precious metal hit $850, only to plunge the very next day to $737.50, a 13% fall. The biggest fall in terms of came in February 1983, when the yellow metal fell from $475 to $408.50 over 2 days, which is a 14% decline. And that gives you some perspective there. Wow. Platinum also declined about 2.4% to $962 an ounce after having touched a low for the day of $940.50. It almost got to $1,000. And it just goes to show you that these metals prices are moving up very quickly. And as I cautioned in yesterday's video, is probably bound to happen for a correction of some sort, or, because it hasn't had a chance to marinate. Marinate being the key word, and I think that's the thing we ought to look for. And before we get our hopes up, before we make these big wild predictions of where the price is going to go, we need to let these prices marinate a bit. And so it'll be interesting to see where this goes from here. The gold market trading at highs was ambushed by strong U.S. data from 8 p.m. to ISM. The data also savaged a frothy bond market, which helped drive the slide into gold, said Tai Wong, head of base and precious metal derivatives trading at BMO. Driving hopes of a thaw in the protracted dispute between the world's two largest economies, China's Commerce Ministry confirmed high-level trade discussions with the United States set for early October. So they set a date. That's it. We don't know what's going to happen with those, but just the fact that was being said, I think, helped rattle a bit the markets. But I think coupled with the U.S.-China, with the U.S. data, the markets were in a good mood. And the risk sentiment that was sparked by the ebbing trade situation is leading to gold market participants to take some of their bets off, said Daniel Gali, commodity strategist at TD Securities. The changes in gold and treasury yields are both symptoms of the same economic circumstances, Gali said. The longer yields are rising because growth expectations are. Treasury yields jumped on the positive developments in U.S.-China trade, as well as the strong U.S. data. Investors will now turn their attention to the U.S. non-farm payroll data on Friday for further clarity of U.S. economic health. So there's a hint. If we do see strong non-farm payroll data come out this Friday, which is tomorrow, as of the recording of this video, today is Thursday, and it is the 5th of September, 2019. If we do see good positive economic data, and then we'll see the prices continue to slide downwards. But keep your hope. There is some hope. We're going to keep hope alive here for those who are bullish on precious metals. With additional positive payrolls data, you can see a further retreat from bonds and gold. But barring a stunning trade resolution, it remains a bullish bond market in the U.S. due to large part to the fact that yields in the rest of the developed world are practically non-existent. Gold might correct, but the overall positive outlook will remain. Palladium was the sole gainer, rising 0.6% to $1,561.93, well above gold now again, having hit $1,567.68 at its highest in more than 1.5 months earlier in the session, just in time for the release of the Palladium Eagle, which now makes it a something that's out of my range. It's going to be over $2,000 now. No, thank you. It's a beautiful thing, but I've got to be resistant to that. So now, where does that leave gold and silver? Let's take a look at it. Now, everybody was all happy that silver got over $19 an ounce, making us wait at 20. And possibly it could, and by the way, it could still go back there, just so you know. The big loser of the day is rhodium. Look at that. It took almost an 8% hit, $350. Now it's $4,500. But gold down 2%. Silver, the volatile metal. It took almost a 5% hit, 4.78%, 1874. But look at where things are. Platinum down $962. Even as such, we have those numbers, 17 and 15. Remember that? We talked about silver hitting $17 and gold at $15. Well, if things continue the way they are, which we don't know, these drops have not marinated yet, then look, the precious metals are still above those two levels that we saw before. And I think those are marination levels. That's right. They've marinated at $1,500 and at $17. Now, silver's over $18. And the reason why I use that term $17 is I think that's kind of the new somewhat temporary floor for the metals. $17 for silver, gold at $15. Those are resistance points, at least in my mind. That's not technical by any stretch of the imagination. And why do I say that? Let's look at the gold to silver ratio. The gold to silver ratio has widened a bit. Now it's at 81.4, up from 7 something, 79, 78 or whatever it got down to. So it's up 2.76%. Makes sense considering the movement in gold to silver. What does that mean? I think there's some room that it's at least is not back to where it was, at least today. What will happen tomorrow? Who knows? Will it go back to where it was before? 83, 84, 85 to 1? Possibly. Still better than 93, and I think we're a ways off from getting back to that point between gold and silver. So I think that in the long term, or even in the medium term, not necessarily the short term, we could still see these rise, but I think those are levels that I think we can say that we can almost say that probably it's not going to go below $1,500 for gold, and it's probably not going to go below $17 for silver. Probably is the key word here. In other words, it could, but those seem to be kind of, in my mind, sort of resistant levels, resistant points there. So what do you think? Post your thoughts below. And where are you at now? Are you still bullish on gold and silver? Do you think it's going to go right back to where it is and recover soon to those levels before? Or do you think we're going to see a kind of a sort of a pullback and a point where it's going to sit for a while and marinate at those prices, at above that $1,500 levels and above the $17 level? And who knows, maybe we'll see at $18 be a resistance level for silver and continue that wide, continue to narrow, or at least keep a narrow window for the gold to silver ratio. Post your thoughts below. I'd like to extend a multitude of gratitude, y'all, for watching, and encourage you to please rate, share, comment, and subscribe.